Well, hi guys, welcome to this Money Control live stream. Tuesday morning, Q's looking pretty positive. GIFT Nifty hinting at a flat but positive start. But of course, we have to keep an eye on the India VIX index. It has gained over 60% in the last 8 sessions. That's the kind of volatility we have witnessed after the Nifty hit a fresh high in Friday's session. Lots of stocks to watch out for, as earnings trickle in. Today we have Dr. Reddy's from the Nifty that will be reporting earnings. We'll be taking stock of what the brokerages are saying about the companies that have reported their numbers. We'll also be taking stock of the strategies that you should deploy in the current scenario. Of course, we will also be getting all your stock-related queries answered by our experts on the show. So if you have any queries, keep them coming in on our live feed on YouTube. We'll try and take them up. But before we move any further, let's take a look at the top headlines at this hour. Wall Street extends gains amid optimism over rate cuts from the US Fed. The Dow clocks a 4-day winning streak, while the S&P 500 and Nasdaq see a third day of gains. Asian markets also trade higher, while the GIFT Nifty is suggesting a positive but flat start for the Indian market. Crude prices remain range-bound with Brent around $84 a barrel amid confusion over a ceasefire in Gaza. Hamas says it has accepted a ceasefire deal brokered by Egypt and Qatar, while Israel says it cannot accept the said proposal. Meanwhile, gold edges higher as dollar softens. Among key earnings to watch out for today, Dr. Reddy's is expected to report a very strong set of fourth quarter numbers. Also watch out for earnings from Voltas, PB Fintech and Pidilite among others. Third phase of the general election gets underway with 93 constituencies going to polls in 12 states and union territories. PM Modi casts his vote in Ahmedabad, urges people to vote in large numbers. The BJP remains confident of winning all 25 seats for the third time in its stronghold of Gujarat. Well, it was a flat close yesterday, but it was a highly volatile session. So the Nifty ended below that 22,450 mark. In fact, it closed marginally below that 20 DMA of 22,454. India VIX another 16% or 13.5% uptick, to come in closer to that 17 level. It's mind you at a 52-week high. The Nifty Bank Index as well closed marginally lower, down by about 30 points or thereabouts. But the Nifty PSU Bank Index deserves mention. This index slumped 3.5%, and you had the likes of SBI among the laggards, which by the way reports its numbers this week. Looking at the FNOQs, the Nifty open interest was up 5.75%, added 6 lakh shares, and the Nifty May futures was trading at a premium of 107 point vis-a-vis 99.35 points. The Nifty Bank bank also open interest added 2.4%. That's the kind of open interest it added. Shares 47,640 shares added in open interest. The PCR has remains below 1.85 vis-a-vis 0.89 in the previous session. And if you look at the stocks that are in the FNO ban, SAIL is a new addition, but GMR Airport, Balrampur Chini, Aditya Birla Fashion, Biocon and Vodafone Idea, these are some of the stocks that will remain in the FNO ban. The trend of FIIs remaining net sellers continues. So FII net sold 2,100 crore worth of shares in the cash market, whereas we have seen support coming in from domestic investors who remain buyers and bought shares worth 780 crore rupees in the cash market. Of course, on that note, let me also bring on board our technical expert for today. Joining me is Aamar Singh, who is the Senior Vice President at Angelone. Great to have you on the show, Aamar. Extreme volatility at highs. We've not been able to, hold on to that 22,500 mark. The Nifty was trying to do that yesterday, but failed to do so. Would you expect the volatility to continue this Tuesday as well? And what are the levels on the downside you'll be watching out for now that the 20 DMA has been taken out?
Yeah, very good morning, and thank you for having me on the show. So as you rightly said, we've seen some increased volatility in India VIX. And it's been now trading, because if we go back and look at India VIX, so it's now breached the earlier levels of 16.7, which it had made in March. It's traded above that level. So that tells me that, and see, you have to understand that markets are basically the way they are, and also markets are anticipating some of the events which are happening and unfolding as we speak, in terms of the general elections, in terms of the outcome, in terms of the the US Fed rate cut anticipation, and apart from that, the geopolitical tensions. So markets are acting that way. And also we should remember that whenever the markets trade at record highs, and many of the stocks currently are trading at record highs, are very close to the record highs, there's bound to be some sort of nervousness and some sort of anticipation from investors, because the risk reward ratio becomes a big challenge in terms of investing or identifying stocks. So that's one thing that's playing out, and also the uncertainty with regard to the actual outcome of the elections, what we are seeing in India VIX as of today. So having said that, if you look at the levels for Nifty, I would say still Nifty, if you ask me, the long-term trend remains positive. Intermediate-term trend, we are definitely seeing some sort of consolidation. Short-term trend, more or less, again, it's sort of consolidation. We've seen a loss in momentum. And some of the technical indicators, they clearly points towards a trendless market. So what it effectively means is that Nifty is a very good from a trading range perspective, because on the downside, we see it getting very strongly supported around the 22,200, 300 mark. So that zone is a very strong support zone. Till the time we don't see a crack below that level, I would say Nifty is, the biasness is in favor of the bulls. On the upside, Nifty continues to be very strongly meet with resistance around the 22,700, 800 zone, because that was almost the all-time high. So this is a narrow range which Nifty is trading in, and one should be slightly cautious of these levels. Looking at the derivatives data, what we see is that we see that there is some sort of mixed trends there as well.
And what about the Nifty Bank Index? You know, we came very close to that 50,000 mark, but ever since then we've seen the Nifty Bank Index also failing to hold on to, you know, the crucial level of 49,000, right? And especially for Nifty PSU Bank Index as well, we saw some deep cuts coming in yesterday. Would you advise traders to buy into these dips?
See, if you look at Nifty Bank, Bank Nifty is anytime stronger on the charts vis-a-vis the Nifty, because in Nifty, I'll just take a minute to just explain the point. Nifty, what we are seeing is we are seeing some weakness in Reliance, which is one of the major heavyweights. There's some weakness to a certain extent in the IT space or consolidation. But in Bank Nifty, what we are seeing is there's a complete contrast, because if you look at stocks like Axis Bank, you look at stocks like ICICI Bank, they've been doing phenomenally well. If you look at the banks like HDFC Bank, or for that matter, Kotak Mahindra Bank, they've really been pulling down the Bank Nifty. If you look at public sector banks like SBI, so SBI also we are seeing some sort of profit booking, and there also what we are seeing is that in most of the public sector banks, we are seeing some sort of consolidation. But overall, the structure of Bank Nifty continues to remain strong and positive. So Bank Nifty, I would say, is a better opportunity from that perspective. On the downside, Bank Nifty sees a strong, witnesses strong support around the 48,500, 600 levels. Whereas on the upside, immediate zone of resistance is around 49,500. So 48,500, 49,500, that's the immediate short-term range for Bank Nifty, with the overall trend remaining positive.
All right. Since we are talking about banks, you know, just want to take up a query on Kotak Bank that has come in on our feed. Of course, we saw a knee-jerk reaction when that RBI, you know, ban was announced on digital, you know, onboarding of customers as well as credit cards. But then, you know, we saw good numbers coming in, and the stock clearly reacted to that as well. So here on Kotak Bank, how should one go about trading into this counter?
See, if you look at Kotak Mahindra Bank, I would say it's again a sell on rally. So we've seen some bounce back from almost 1543 levels, because 1500, 1550 is a very strong support zone. From there, it has bounced back. Currently, it's around 1628. Any pullback towards 1650, 1660, that can be a shorting opportunity, because the structure of the stock has definitely, I would say, been very weak over the last many months and quarters. So we are seeing some sort of pullback from the lows, because earlier 1540, 1550 was a very strong support zone. From there, it has bounced back. But still, I would say even if the stock bounces back, it's likely to give up its gains and go in for some consolidation. However, if it breaches the recent low of 1543, then we could see some further sell-off in the stock. Otherwise, the stock would go in for some consolidation.
All right, that's the view. But of course, just about 30 seconds to go for market open. Just want to point out that we have been extremely volatile. In Friday's session, on one hand, we hit a new high, and then, on the other, we took a sharp U-turn, and then the market fell to, to a 3-week low. But of course, we did, start the week as well on a tepid note, flat close yesterday. And going by the GIFT Nifty cues, we are staring at a flat open today as well. 40 points higher for the Nifty on the first tick. 22,478 is where it's at. We'll have to see whether it manages to reclaim that 22,500 level and manages to really stay above that level. So that will be crucial. Midcap index has succumbed to profit booking once again after a mildly positive start. Yesterday, the midcap index was down 0.5%. Even today it remains under pressure. Just want to see what the small cap index is doing. 1.5% cut yesterday. We saw the small cap index underperforming its larger peers. Today mildly positive, but we'll have to see whether or not it manages to hold on to these gains. Sectorally, I want to pull up the Nifty PSU Bank Index. A near 4% cut yesterday. That's what we saw, weighed down by heavyweights like SBI. Today, we are seeing some green ticks coming in there. Almost 0.5% kind of gains coming in there. Also want to see what the metal pack is doing. Hindalco will be in focus as Novelis has reported strong set of numbers, and brokerages have also maintained their bullish view on the stock. So the Nifty Metal Index, although is trending lower, 0.3% kind of a cut coming in. Look at the other sectors as well. IT is one pocket that staged a good rebound after last week's underperformance. It's holding on to gains, slim gains, although just about 0.2% kind of gains coming in there. What is supporting the market right now is some of these OMCs, BPCL. Up 2%. Of course, it will be considering bonus shares along with HPCL. The stock BPCL top Nifty gainer. Britannia extends its up move from yesterday. The stock was the top Nifty gainer on the back of a volume beat in the fourth quarter. HUL, ONGC, Nestle India, Titan, by the way, had slumped 7% as numbers disappointed on the back of competitive pressures. But today, looks like there has been buying at lower levels. That has staged a good comeback. If you look at some of the laggards today, HCL Tech, that's the top Nifty loser. Bajaj Auto, Divi's Lab, L&T, mind you, it reports its numbers tomorrow. So L&T ahead of numbers is under pressure. Power Grid continues to lose. Yesterday as well, it was on the losing end. Cipla, Tata Motors, Apollo Hospitals. So pharma names under pressure this morning, and so is Reliance Industries, trading marginally in the red. Aside of that, let's also take a look at the advanced decline ratio. Right now, it's in favor of gainers, but usually in the mid point of the session, towards midday, we see a sharp reversal these days, and the advanced decline ratio or the breadth turns in favor of losers. We'll have to see whether or not we manage to maintain this market breadth. Right now, it's a flattish start. With the mid-cap index in the red, but the Nifty up still below that 22,500 mark. Aamar, looking at the open, what kind of an FNO strategy would you take for today, and any recommendations for viewers?
Yeah, I would say that I would be bullish as Nifty trades lower, because somewhere around 22,400, 415, that's a strong support zone for where we could witness some bounce back. Otherwise, because some of the technical indicators are clearly pointing towards a trendless zone, and also the derivatives data, if you look at the put call ratio for the current weekly expiry, is around 0.63. So that really doesn't inspire much of a confidence in terms of any major bullish move. Looking at the strategies, I would say one stock to look at is HUL. HUL is one stock, I would say it has been significantly beaten down. And we are seeing some sort of positive move today. It's moved up sharply. I had spoken about this a couple of days back also. So the stock has bounced back, and the stock has the potential to rally towards 23.45, 23.50 levels. So this is one stock one can definitely look at. And the other stock which I like is Hindustan Motors. This is one stock which is again on I would say, on a roll. The stock has more than doubled in the last less than a month, and the stock continues to be very strong and firm. So this is one stock. The second stock one can look at. Any pullback in this stock is a buying opportunity, Because if we go back in time and look at the particular stock, the stock has traded significantly higher in the past as well. So this is one stock. The second stock one can look at.
All right, that's the view. In fact, those are the recommendations coming in from Aamar. Aamar, how would you trade into a Hindalco? Novelis has reported strong numbers. Adjusted EBITDA is at a 7-quarter high. You know, we've had brokerage calls, retaining their faith in the company. Jefferies has a buy call. Target price has been raised to 810. And the CLSA also has a buy call with target price of 770. Of course, we've seen good traction in some of these metal names, but off late we've seen intermittent bouts of profit taking as well. In the last 1 month, the stock has given good double-digit returns. So, would you advise sell on rise here, or would you say buy on dips?
So I wouldn't advise sell on rise, because if you look at the overall trend of Hindalco and most of the metal stocks, so they continue to remain positive. But what we are seeing is that we are seeing some decline in the positive momentum. So that's something quite visible. But I would say the trend is your friend till the time it bends. So from that perspective, if you look at from the intermediate term or the long term trend, the trend continues to remain strong and positive. On the daily chart, we are seeing some sort of consolidation. Some of the technical indicators are pointing towards overheated market. But I wouldn't recommend a short going short. But yeah, one can look at booking profits, those who are long. Fresh longs at the current levels, I wouldn't recommend.
All right. Nifty FMCG seems to be in favor today. Of course, we are seeing Marico emerge as the top Nifty 500 gainer. What are the levels you'll be watching out for here on the upside?
Yeah, so Marico is again one stock which, if you look at the stock, really didn't perform earlier much, but now the stock has is witnessing a significant up move, and the stock has rallied from the recent lows. So, and the stock has reached its key zone of resistance of around 550, 560. So now the next level for the stock is somewhere around the 600, 595, 600 level. So, but at the current levels, chasing the stock wouldn't be a very good idea. But the trend has definitely changed for the stock, and sustaining above 600 levels, then the stock could witness a very sharp up move towards 640, 645 levels. But one needs to be prepared for increased volatility in this particular stock.
All right, be prepared for volatility when it comes to Marico. But let's talk about the pharma pack. Dr. Reddy is expected to report strong earnings. How would you be trading into this stock ahead of earnings? And Lupin, slight miss on the profit front. Margin, however, has managed to beat estimate. We have a buy call from Nomura this morning with a target price of 1949 rupees per share. It says that the US launches as well as a tight leash on costs could give some bit of upside potential for earnings going forward. But from the pharma pack, would you prefer these players like Dr. Reddy's and Lupin now, or would you say look at some of these hospital stocks?
Yeah, I would say looking at Dr. Reddy's, what we are seeing is that Dr. Reddy's has a very strong resistance coming out of the 6,500 level. Currently, it's around 63.35, 63.40. Overall, the trend is definitely positive for Dr. Reddy's, and recently, as recent as 25th of April, we witnessed significant volumes as compared to the average volumes of the last 20 or 30 trading sessions. So that tells that a lot of buying has happened at levels anywhere between 6,000 to 6,200, 250. So the upside remains therefore overall trend remains positive for Dr. Reddy's, but at the current level, one needs to be slightly cautious for fresh entry. Dr. Reddy's is comparatively better placed as compared to Lupin, because Lupin we are seeing some sort of selling pressure. Also, some of the technical charts indicators are pointing towards consolidation. On the downside, Lupin has got support coming around the 1550 levels, and so it's more of a range play for Lupin, and we are seeing some sort of consolidation on the intermediate term trend as well. So it could go in for consolidation between 1700 and 1500. That's the range for Lupin in the short term.
All right. Also, we're getting your thoughts on a Gujarat Gas. Numbers came out yesterday. They have failed to impress, and this morning we have a sell call on this stock from Citi. They have a target price of 450 rupees per share. Of course, in the last 1 month, we've seen the stock come under a fair bit of pressure. Would you advise buying on dip here as well?
See, if you look at Gujarat Gas is more of a range play. Because if you go back and see, so the stock is supported around the 530 level, and then below that around the 500 level. So the levels to really watch out for the stock is 500, 520. That's a zone of support. one wishes to take an opportunity of entering, this would be the level where the risk reward ratio would be slightly favorable. But if the stock starts trading below the 500 level, that means the stock is likely to witness some major correction from those levels.
Just one more stock that I want to discuss is Titagarh Rail. We have a Morgan Stanley call on this stock. They've initiated coverage with an overweight rating and target price very close to its 52-week highs, 1285. They've said that, the passenger business as well as freight business would be the cash cow or growth engine going forward for this particular company. But rail stocks have, lost some bit of steam off late. Would you say that, the risk reward ratio is looking favorable after, the kind of correction some of these stocks have seen?
So if you look at Titagarh Rail Systems, see the overall long-term trend remains positive. Intermediate term, we witnessed some sizable correction from almost 1200 levels to 800 levels. Again, the stock is back towards the 1100 mark. So the trend remains positive. Only the question is that the risk reward ratio, which you rightly said, that's a concern here, because on the upside, the all-time highs is close to 1200, 1248 levels, and currently it's around 1100, and the support for the stock is below the 1000 mark. So the risk reward ratio is not very favorable, but overall the trend is definitely strong and positive for the stock. On corrections, this is a stock one can definitely look at.
All right, hold that thought. Aamar, we'll be talking about more stocks and we'll also be discussing viewer queries with you. But let me also bring on board Asutosh Mishra, who's the head research institutional equity at Ashika Stock Broking. Great to have you on the show, Asutosh. Before we get into a discussion on stocks and markets, want to get in your thoughts on some bit of news flow that's coming in this morning that SEBI has said no to NSE's proposal of extension in market hours, right? Your thoughts? Were you prepared to work for longer hours?
So yes, almost all of us were ready to work for a longer hour or in a shift hours because of it. But broker community as well as different market participant has given a feedback to the SEBI on this. That at this is not the right time to go ahead with this. We are already seeing many more regulatory changes such as T+0, T+1, and already system is choked up because of many of these changes at this point of time. So extending the time at at this juncture will be not the right steps, and probably we can defer it for some time. So in my view, this is the right step for time being. Yes, from the BSE and NSE perspective, this may be slightly discouraging news for them. But for overall, the type of changes which market regulator is taking place, is doing at this point of time, in that view, it is good news in my view.
All right, good news in your view. But let's talk about the market then. Looking at the texture, we've been extremely volatile. How are you advising your clients to position themselves at this current juncture as we step into the June 4 event, when we will get to know the verdict of the ongoing elections?
Yes, so market is getting quite confused about we are getting different type of misleading news also. Like few days back, we got about the taxation part of it, and yesterday the discussion point was about the banking sector led by some proposed change by the RBI on the way provisioning requirement will be there for the project under implementation norms. So yes, next 3 weeks or 4 weeks, we are going to see a lot of volatility. Today is the third phase of the polling is undertaking place, and all the market is quite certain that the current dispensation is returning back. But at what with what margin and how that is a lot of being discussed at this point of market. And I think this volatility will continue. Even from the global perspective, we are getting a lot of different type of news, especially Gaza-Israel war and what is happening especially in the US on the interest rate front. So next 3-4 weeks, we are going to see a lot of volatility, and on result side also, all the best quality result is already behind us. Now what we are seeing, the results is much more, some painful result is coming in at this point of time, and that may have a negative consequence on the market for time being.
All right, I'm going to discuss a couple of pockets with you. The FMCG space, barring HUL, which saw, a muted volume growth. We've seen good volume growth coming in from Godrej Consumer, industry-leading volume growth, so to say. Dabur has done well. Marico as well has done well. Also, we have the IMD that has forecasted, an above normal monsoon going forward. Do you think the worst on the volume growth is behind for FMCG names? And is this one pocket that could emerge as a dark horse this year after the underperformance that we've seen?
Yes, you are. What we are also thinking in the same direction. Probably volume growth is going to pick up in this financial year for the FMCG companies, especially monsoon side, and demand from the rural market is expected to pick up going forward from here. But within the FMCG space, what we are also seeing that a lot of disruption is taking place because of the online marketplace, like many of the smaller companies which are taking away the volume from the listed entity. And that's why some of the larger companies are not only seeing the demand side pressure, but also competition from some of the newer player which has emerged quite strongly because of change in delivery and distribution dynamics at this point of time. Today, in any part of the India, you can get delivered of these product at your doorstep, which was earlier when we used to discuss about the any FMCG company distribution was one of the important criteria. And now what we are finding that that mode is getting challenged for them, and that's why the volume growth for some of the listed entity may remain relatively subdued than what market is expecting. Yes, improve on the year-on-year basis.
All right. What about Titan? We've seen margins come in below estimates. Competitive pressures, volatile gold prices have impacted earnings. So going forward, do you think the stock is poised for a derating given the fact that valuations at 60 times forward earnings? Do you think that looks unjustified right now?
In my view, if you look from short-term perspective, we may say that the valuation is unjustified, but the space in which they are operating, the type of unorganized market which they have in front of them, and the way they are executing it, this stock has a long way to go for. If someone is looking to invest over the 5 to 7 years of the period, this stock is going to give very handsome return despite being trading at a very higher valuations at this point of time. Yes, some volatility because of the gold prices and other we are witnessing at this point of time. But this is one of the best team which is executing the plan in a best effective manner. So some short-term pain are there. If the stock get corrected, in my view, people should add on that point of time.
All right, that's the view. The long-term prospects for Titan remains intact. But let me talk to you about the draft norms proposed by RBI on project financing rules. We saw a knee-jerk reaction on stocks like REC, PFC, IREDA, and even the PSU banking lot. But some of the brokerages have issued notes saying that the impact on profitability of NBFCs will be minimal. So according to you, do you think PSU banks will be impacted more if the rules become a reality?
I think, in the current form, if you read the readings, probably the rules may not become the reality part of it because it's totally different from what is RBI and government motto at this point of time, pushing the infrastructure growth of India to the next level. See, suppose if you ask any bank or NBFC that, you have to do the 5% provisioning for all project which is under implementation, then it becomes no starter for it. There is some issue in the wording of the document which RBI has floated at this point of time. And if we go by some of the con calls which was held yesterday post this, Indian Bank con call was there, and the way management explained this thing that they will put forward their points to the RBI, and even market has communicated their view to the RBI. We are not seeing this, this regulation coming in the current form of it. What we understand that probably RBI is trying to say is that if the DCCO is getting extended, in that case, bank need to make a provision of 5% on these standard loans, which is already there at this point of time in way of restructured loan. Whenever the bank restructure the loan, what is restructured? Restructuring is basically whenever you change any terms and condition, either DCCO or payment terms or interest rate, then the loan is considered to be restructured loan. So in that case, bank need to do the higher provisioning. So the RBI is bringing back that regulation probably from that route. But yes, there is some confusion on the wording of the draft circular at this point of time. And probably that will be get cleared over the period of time. So I don't see any major impact. Simply taking in the consideration that the object of the RBI and government does not go along with the exact wording of the circular at this point of time.
All right, we'll be awaiting for more clarity on that circular going forward. But last question, really, we've seen CDSL. This stock is buoyant in trade. It has opened a record over 1 crore demat accounts in a quarter. That's the highest ever quarterly registration of demat accounts, and it has become the first depository to have a total demat accounts at over 11.5 crores. Numbers were fairly good, and the stock has been doing well. Do you see an investment case here?
So, if you look from the, again, like a Titan, what we discussed is about short term, we may discuss about whether the valuation is that part of it. But the way things are panning out for this company, still this 11 crore number over the next 4 to 5 years can go to 20 crore numbers in India. Population concentration in such a way that many young people can come and join, and even the fees part of the business and other part of the business which they are extending it is clearly put this company in a very favorable situation, and they don't have any other issues such as debt and other part of it. Once you roll out the technology, then things will be moving much simpler for them. Only challenges which I see for this company is that the cryptocurrencies technology of basically, if that is start getting implemented in the way for stock trading part of it also, then in future probably we may see blockchain can disturb this the current business model of CDSL. Otherwise, CDSL as a business model for the next 5 years is very good, but and that's why in the short term we may see some cool off in the stock price. But anyone who want to keep a good piece of business with them, then probably this stock will remain favorable for these investors.
All right, that's the view on CDSL. The outlook is fairly positive on this one. With that, Asutosh, thanks a lot for taking out time and joining in and sharing your thoughts with us this morning. Always appreciate chatting with you.
Thank you. Same here.
Well, with that, let's go back to Aamar, who's been waiting by very patiently. Aamar, let's take up some viewer queries that are trickling in this morning then. The first one is coming in from Debu K. He wants to know your thoughts on Astral Poly. This stock has been in a good uptrend. If you look at the monthly charts or 6-month charts as well, on a YTD basis as well, it has given double-digit returns. If somebody is holding this stock, would you advise them to add on dips, or would you say that take partial profits now?
What's the name of the company you mentioned?
Astral Poly.
Yeah, so I would look at the charts. It would be a good idea to book part profits and hold on to the stock. Because the stock has witnessed a significant rally. So I would recommend that booking part profits should be the way forward in this particular counter.
All right, book partial profits. That's the call on this particular stock. Hope that answers your query, Debu. The next query is coming in on a CG Power. This one's coming in from Maheshwar Bhanu. He wants to know whether one should accumulate at current levels. Would you advise, because numbers came out yesterday, PAT growth was flat. Last 5 sessions it has barely done anything, but today it's up 2.5%. Would you advise buying into this one?
No, I wouldn't recommend buying at the current levels because the stock has witnessed a significant rally. I guess the stock has witnessed a one-way up move, but buying at the current levels, the risk-reward ratio might not be very favorable. So rather wait for some correction in the stock before getting into the stock. Otherwise, you might end up buying the stock at the highs.
All right, wait for a correction. That's the view then. The next query is coming from Alex. Wants to know your thoughts on Sona, BLW, and the kind of support levels to watch out for here. What would you be watching out for on a Sona Comstar?
So if I look at this particular stock, it's a touch me not sort of stock right now. It's not going anywhere. The stock has corrected recently, but technically, if you ask me, the stock is trying to form a base somewhere around the 600, 580, 600 levels. So this is a stock you can rather stay away from because the trend also of the stock isn't that very strong.
All right, that's the view. Hope that answers your query. But let's talk about an HPCL. It will be announcing or it will be considering a bonus issue on the 9th of May. It will be the first bonus issue in the last 7 years and the third from the company. BPCL, HPCL have seen a fairly good run. Crude prices have come down below that $85 now. Going forward, is buy on dips the strategy here as well?
HPCL, I would say rather one should look at booking profits because the all-time high with the stock had made 594, 95 levels. Currently, it's 10%, 10 to 15% lower from those levels. But if you ask me, the intermediate term trend and the short-term trend tells me that the stock is in for consolidation. So I would rather suggest that those who are long, they should look at booking profits. Fresh entry at the current levels wouldn't be advised.
All right, avoid entering at current levels on an HPCL. A couple of more queries. This one is coming in on Federal Bank. Should one buy on dips? That's the query. Just forgetting, can't spot the person's name, but what would your advice be on a Federal Bank? Should one buy on dips? It has seen a good run.
Yeah, it has witnessed a good run, and if you ask me, technically, it's the trend is up on the long-term, intermediate-term trend. We've seen some very good volumes also happening in the last few days, but the recent top which the stock has made, that is 170, that should act as a very strong resistance zone. So I wouldn't recommend fresh buying at the current levels. The levels to watch out for is 150, 170. That's the range for the stock. Any pullback, it can be a buying opportunity, but you need to remember that till the stock does not sustain above the 170 mark, it could go in for consolidation.
All right, that's the view then on a Federal Bank. But last query then, this one is on MCX coming in from KJ. Wants to know your thoughts. Do you think the risk reward is looking favorable? Because over the last 1 month or 6 months, it has seen a phenomenal run, right? But off late, some bit of profit booking has kicked in. Would you wait for more correction to say that risk reward is now favorable?
Yeah, at the current levels, wouldn't recommend buying MCX because the stock on the intermediate term trend clearly shows that it has lost its momentum. And on the daily charts also, the stock is inching towards consolidation. So I would rather suggest that one should wait out rather than buy at the current levels.
All right, wait for more correction before getting into this one. Hope that answers your query. But with that, we've come to the end of the query segment. Aamar would like to take this opportunity to thank you for taking out time and joining in this morning and sharing your thoughts with us. Look forward to interacting sometime soon. Well, with that, of course, we have come to the end of this edition of Opening Bell. But as we wrap up, just look at the market. It's holding on to gains, just about clutching on to slim gains. Midcap index in the red. Even the India VIX index was up another 2%, and the advanced decline ratio has now swung in favor of losers. So 1:1.5. That's the NSE advanced decline ratio. And what's weighing down on the index, are stocks like UPL, Apollo Hospital, M&M, Divi's Lab, Ultratech Cement, Infosys, Tata Motors. On the flip side, you have ITC, that's emerging as the top Nifty gainer, BPCL, Coal India, HDFC Life and Tata Consumer. These are some of the stocks on the gaining end. But with that, we are completely timed out on this edition of Opening Bell. Thanks a lot for tuning. But of course, come back and join us on Closing Bell at 3:30 p.m. where we take you through market close and some of the stocks that will be on our radar. Thanks a lot for watching. Have a good day.